If you've been trying to learn to trade and you still aren't a profitable trader, then watch this video. I'm going to show you how to enter and exit the most profitable trades possible by simply using 3 steps. Okay, so now we will be discussing the 3 steps to enter the most profitable trade and why you cannot become a profitable trader before you understand these 3 steps. Have you ever found yourself entering trades without confidence? Have you ever experimented with countless strategies, yet failed to discover profitable trades? Have you ever thought about the question, where am I going wrong? The only problem is that you don't have a strict rule or strict entry criteria for each time you enter a stock. As traders, we need to be robots where we have to control our emotions so much that the entries we have are so systematic that we don't have to think about them. In this video, I'm going to show you the 3 steps you can use to become a robotic trader using these entry criteria. As I mentioned, I'm going to show the precise 3 steps I use when entering my trades. Now, let's delve into these 3 steps in detail. Step 1. Identifying market trends, identifying patterns, identifying structure. Step 2. Drawing important key levels to help you track trades. In step number 2, I will be just talking about simple support and resistance principles that you can trade on a daily basis. I have already made a video on this topic, so do watch that for better understanding. Step 3. Entering the trades with strong price action. This is where most traders fail to understand what's going on, and we are going to get into that when we look at real examples. So, the 3 criteria before I even enter a trade is to look at which way the market trend is moving. Is it upwards, downwards, or is it sideways? After identifying the market trend, the next step is to spot the patterns forming on the chart. Looking at these patterns helps us figure out which way the stock is going. It's like connecting the dots. Are we seeing a series of lower lows and lower highs, which means it's going down? Or are we witnessing higher highs and higher lows, indicating an upward trend? By putting all this together, we get a clear picture of how the stock is moving. So now that we have understood the steps, let's put these 3 steps into use in an actual example of a real trade. Here we are on our first example on this Tesla chart. What do we need to see is the number 1 step, that is which way market is trending, the market pattern and the structure. So here we can clearly see that there are lower highs and lower lows. This clearly tells us that we are in a downtrend on a 15 minutes time frame, so all we need to do is find shorting entries. Now that you have made up your mind that you will only look for short positions, draw trend lines, support and resistance so that you can enter once price action is confirmed. The trend line can be drawn when we have spotted lower highs and lower lows. Now over here, looking at this trend line, we see the price is below the trend line, so now we have to enter a short trade at this trend line. So now let's wait for the stock price to reach this trend line. But as you can see, the price never came to this trend line of ours and started to fall more. Now I have a question for you all traders watching this video. Will you enter a short trade randomly just looking at the prices falling? Comment yes or no. Let's see how many get this correct. Since the price is falling down and we don't have a clear entry yet, we have to be patient enough for price action to be formed. As you can see, the price broke the previous low and retested back at this level. Now this is a proper price action for us to short the market. In this case, market fell very nicely, but as a realistic trader you must always aim for 1:2 ratio trade. How I like to take my target is I always aim for the previous low. Let us see one more example where we enter a trade from a higher time frame to a lower time frame. This is also called multi-timeframe analysis. We are looking at the Canadian dollar against the Japanese yen chart. Remember the first step, that is to identify the trend. Since the trend here is a downtrend, we will look for short entries. And step 2, identifying the pattern. Over here we can clearly see the double top is getting ready. So shift to lower time frame, say 15 minutes. In 15 minutes you can see that we have price reversing from here, so we draw a support zone and wait for it to break to enter. Now let's see an example of long entries in multi-time frames. As always, step 1, identify market trend. Step 2, identify a pattern. Over here, higher highs and higher lows are created. Now that we know the market is in an uptrend, we have to find long entries. So now step 2 comes into play. Look for chart patterns. Here we can see a flag pattern, so let's draw our pattern and go to 15 minutes time to check our possible entry. Lowering the time frame is the quickest way to capture an early entry. Always take 1:2 profit ratio or the previous high as the first target. Let me show you another example of a long entry with a commonly occurring pattern. As you can see, this curve, which is in the shape of a cup with resistance at the top, this pattern is called a cup with a handle pattern and is a bullish pattern. Since we already know this trend is in an uptrend, this pattern adds to our advantage. That's all for this video. Do not forget to like, comment, and share this video.